Hey everyone, before I get started, I just want to remind you that if you like my content, hit that like button, subscribe to my channel, and then join the Militia Man and Crew Patreon community by clicking the link in the caption. Hey, good evening everybody. Militia Man and Crew here. Hey, I just want to let you guys know before I get into the Dinar, I have a special interview with Colin Plume from noblegoldinvestments.com. And I just want you guys to understand that real assets are what I believe in. And gold, silver, precious metals are real assets, and I believe in those. Just like I do the dinar. So when I get done, check out what I have for you and show a relationship with gold and Iraq. Welcome to Militia Man and Crew. This is a fine Wednesday afternoon. We have some dinar-related topics that we're going to get to. But before I do that, I would like to introduce the CEO and president of noblegoldinvestments.com. Colin Plume brings a wealth of knowledge on gold, silver, and other precious metals and how to acquire them safely to protect your wealth. So I'm going to bring in Colin and we'll talk.
Yeah. You know what, Brent? I do want to talk about gold and silver, but I am interested in the Iraqi dinar, and I want to ask you a few questions because when I started, I've been in the gold space since 2008.
Okay.
And that was the first time I ever heard about this Iraqi dinar. And what everybody was saying in 2008 is that the dinar was going to come back. So I had a lot of clients in the gold space that bought the dinar. And I don't know when, I followed it to some extent, but didn't get into it too much. So maybe you could just if you could enlighten me a little bit about, maybe give me a brief cursory overview of what's happened since then to today, because I'm still kind of catching up on it, and I'd love to learn from you about it.
Well, thank you. And I think I have I got a lot of experience. I've been involved in this for about 15 years,
Okay.
and things have changed over the years. I had been, given the opportunity to do the research on it, and so once I started doing that, I found that there was some data that was in the IMF's archives. Okay. And anyway, it was a 198-page report. And once I saw that, they talked about revaluations. They have all different types of things that they talk about. But one of the things they said was the previous era with the dinar was about $3.22. Simple. I go, wow, that's crazy. What is it at now? I think back then it was around, it was in the 1166 or something like that to 1 ratio. And so I would, why not? So then I started thinking about it and learned about it and grew my knowledge over time, because effectively war-torn countries get rebuilt again. And we saw that in World War II. We saw that in Japan and other places. But here again, we have a situation with Iraq, a very wealthy country, phenomenal amount of wealth. I believe there's about the estimates are around $16 trillion worth of untapped resources. That's a lot of money.
Yeah. Oh yeah.
So, right. So Iraq's dinar has been moving along sideways and actually depreciated in 2023 from 1450 back to 1310 where it is now. Okay. And so why is it going to be doing something different? Well, to me, that's a placeholder type situation. And I think research will tell you that the dinar is undervalued because of the nature of how much natural resources they have. So if you think back in 2015, let's call it, or even before ISIS and all that kind of stuff, and Saddam Hussein, for instance, they were at the 322, but that was all based off oil. Mm-hmm. And that was pretty much only one thing. The rest of the time, now what do we have? Well, they've increased last 3 years, for instance. We'll fast forward to under al-Sudani's watch. You have them doing their banking system, for instance. One of the key things is that they'll do at the end of the day is going to be they'll restructure the state banks. So that's a key component. Going to electronic digital banking is underway as we speak. So all these things come into play when a complex situation. So what you add in all the natural resources, but you add in they're not flaring oil. So it brings value, because what happens is when they stop flaring oil, they won't have to purchase it from other countries like Iran or anywhere else. And they'll be self-sufficient. So Iraq as a country has inputs and outputs, and they're going to have both sides of the equation. And so that's why I believe that at this stage, because significant things have taken place, because you have the likes of like Oliver Wyman and a few other Ernst & Young, and everybody's been helping Iraq do all this. I believe that the Bank of International Settlements is helping Iraq do this. I think that we just saw, I know we did, a meeting with Al-Alaq, the central bank governor, talking to the Bank of England to get the nod to join the Bank of International Settlements. So there's a lot of little bits and pieces to this puzzle, but the bottom line is, are they moving forward? Well, the central bank governor told us more than once that the project to delete the zeros of the exchange rate is going to happen. It's in process. They're working on it. So he can't tell you exactly what's going to take place, but he can give you some information. So with that said, joining the Bank of International Settlements would be really a big move, but are they going to really do that at 1310? Highly likely not.
When you say 1310, is that like compared to the dollar, or what is the 1310?
Yeah, exactly. So it's going to take, to buy $1, you're going to have 1,310 for the central bank. Buy $1.
Buy $1 US.
That's right.
It's 1310, and it was during Hussein. It was 322.
Yeah,
dollar.
Right.
Okay.
And that was just based, like I said, that's based off oil.
It's based on oil.
That was back then. It was just based primarily off oil. But to keep in mind, there's so much to this story. But I'm not going to get into all that. But the bottom line is that they have they've done all the work to become integrated into the global financial system, and they're not at 1310. Why? Because they're using the yen. They're using the U.S. dollar big time, right? And they're also using other currencies, the euro, for instance. And a really interesting thing, and how people don't know, but there's support for Iraq's valuation by the oil trade. For instance, they shut off the oil to go to the Cyan pipeline that's through Turkey, which is going to feed Europe. But they had turned that off for about two years and a few months. And so companies in America like HKN and other companies were losing big money, and they did lose big money. But once they turned it back on within the last month, right? They turned it back on. That oil is going to help fund Iraq's budget. And that's one side of the trade. And then there's another side is you got Japan coming into the country to take all that natural resources too, and to Asia. And so these are some of the largest companies in the world. And it ties into new CBDCs, believe it or not. Central banks are going to be talking about new CBDCs, and they're going to have asset components to those things. And commodities, which is fascinating because I didn't really know this till just recently, is that they're trading oil commoditized, tokenized. And so I believe that through the connection that Iraq has talked about launching a digital dinar, they're going to be able to have a CBDC, launch a digital dinar, CBDC. And I think that's going to have an interconnectivity to a lot of new technologies, and you're probably aware of those. Mm-hmm. But ultimately, the value, if they do an adjustment, drop the 3 zeros from 0.00076, if you will, or 6, you get the picture. And then they will apply a real effective exchange rate based on fundamentals. And that's going to be off their gold, their reserves, etc. So that's just a real fast part of my analysis.
Yeah. No, it's fascinating. I mean, I think, it's an interesting thing to think about, that a currency could go the opposite way that most other currencies go, right? I mean, that's part of the reason that everybody buys gold, is because the dollar continues to lose value, because they just keep, creating more dollars, and there's more debt, and there's more, and everybody, a lot of people they don't realize that all these things that are happening, they affect them. It does have an effect on your purchasing power. Whereas with Iraq, the idea is that if they can get their currency more widely accepted, which is one of the reasons you say you think it's going to be beneficial, if they can back it by gold, if they can back it, basically if they can strengthen their dollar and do the opposite of what we're doing here in the U.S., then there's a base case for the dinar's value relative to the dollar to drop, right? So instead of 1,300, it drops to like what like if it dropped down to like 300 or 200 or 100,
there would be significant value to it.
Significant value. So that's okay, interesting.
Yeah, they talked about bringing back coins, and so they talked about over time. Why would you have coins at 1310, 1,310 to the U.S. dollar? Okay, you don't have them. So now they talk about coinage again. But why? Because it's like an educational piece to me. It is. And so because they have to educate things, it's really complex where they have to tell people about what they're going to do, especially when it comes to a revaluation of the currency. They got to have everybody on board. They got to have the citizens on board. And they have to be very quiet about it, but they have to be able to be very educational about it. It's a really tight, fascinating scenario because that's what's taking place. And so if they have coins, if they're going to even talk about coins, you got to realize there's value. I mean, we dollar, penny, why do you have it? Because it's a fraction of it, 100. So it's no different than the dinar will be in the future. If they have coins, they're going to have a need for it because of the value. That's why. Yeah. So it's an expectation to see what's happening. I really feel good about my study when it comes to that.
Yeah.
And I wouldn't be surprised if I'm right. A lot of people are going to be looking and knocking on your door. So
yeah, I mean, but it obviously hasn't happened overnight, right? I mean,
no, not yet, not today.
Yeah, because
I'm aware of anyway. Today's been a busy morning.
Yeah, I mean, people have been talking about it for a long time, but that doesn't mean that it won't happen. And I remember having conversations with people. They're like, when my dinar gets revalued, they want to buy gold, which is interesting too, because if you think about it, like the idea of them wanting to get out from a fiat into gold makes a lot of sense too, right?
Yeah.
And I would say the analogy that I've seen, Brent, is what we've seen a lot with clients that are in crypto. We have a lot of clients that have sold their crypto and they want to get out of that because it's, they don't feel comfortable there. And then they buy like something physical. I think with investments like the dinar, like there's so few investments in the world that could go up 100 or 200 or 300 or 400 times, right? I mean, it's so rare for something like that to happen. But I always tell people, like, you do need to give yourself an opportunity to have those kind of big wins in your portfolio too. And I know that there's like, the Warren Buffett approach where you never lose a dollar and this and that. But I think if you did the math, and I've done it, if you, 1 to 2% of your portfolio is in things like this that have some data behind it, that have a belief system, and it's just a few things need to happen, and they could move the needle for you. So I think it's interesting, and so people are just buying it and holding it. Is that what people mostly do?
I would suggest that, as far as me, all I do is just give the information about what I believe is going to take place. But a lot of people that in my experience have collected and still hold it, and they might have had it for 10, 15 years. A lot of the people that I deal with are really have been around for longer than me. I've been invested in it for 15 years. But I like you, I believe in real assets. I think the dinar is a real asset. I think gold and silver and precious metals, we've had this conversation before. I believe in real assets.
Yeah.
And I believe that if in fact the dinar does do what I believe that they will do, there will be a significant amount of people that have significant profit, significant profit. And in trying times, just like inflation and all these different things, a lot of people have been pinched, and that's one of the reasons possibly why, and you probably want to talk about that maybe or not, but is inflation helps support the value of precious metals.
Yeah.
So in Iraq's case, and then the risk reward, like you mentioned, as far as percentage wise, 1 to 2%, I think you can get a lot of dinar for small amounts of money if you're looking at big money.
Yeah, so probably even less, you would say. No, I always say 1 to 2% should be in these high flyer type of. So like I even spread them out, if I see some opportunity in like a mining stock, or if I see something in another type of investment,
Okay.
Something that I think that could go up, pretty 100, 200, 300 times.
Sure.
Dinar would, in my opinion, would fall into that, right? Like no one's gonna like buy this and it goes up 10 times and they're happy. You're going for the big run on something like this.
Yeah, because of the fundamentals of the country, it's the risk is like, okay, so it's taken 15 years. Why hasn't it gone? Well, there's been a lot of stuff that's taken place. There's new technologies that are in place.
Right.
There's new different players. There's different politics. There's all kinds of different things. But what do you have? You have security and stability in the country now.
Yeah.
And you have that. And then that's a really big component. And then you have all the extras that go with it. And so the risk reward to me is why people aren't interested is, I mean, if you're going to do a 1% to 2% punt, I think I don't see anything wrong with that at all.
Yeah. And I think it's overall like, you have the majority of your stuff in things that are going to provide the 8 to 15% returns, which that really gets you there where you need to go. And right. It keeps you up with the cost of living and, and then you also hedge your bet on bad years too. Like a lot of people, the reason they're buying gold from us right now, I would say, so we survey our clients, and I've been in this space for 16 years. I've had Noble Gold for 10 years. We've been it used to be like just mostly inflation was the reason they bought gold, or they didn't have any, so they wanted to diversify. But the two things that I'm seeing now, the two most common things, is that financial advisors and the public are actually recommending to have gold in your portfolio. I think we talked about Morgan Stanley said you should have 20%. So there's that whole movement that's happening. Yeah. But the biggest thing we hear is investors that say to us, as much as I'm happy about my gains in AI investments, in AI companies, I'm happy that I was there. I don't think the returns justify the value of what I'm invested into.
Okay.
In that they think that it's a bubble. They don't feel comfortable that, and the more you look into AI, the more you realize that 99% of the technology is a failure. And so, there is the big wins, and ChatGPT and everything that you're out there, but the amount of money that's put into the other ones is astronomical. And so, where does that money come from? Like, where does the money invested in AI come from? It comes from you and I buying that stock.
Okay. Yeah.
And so we're buying into a lot of failure, and we've been, and even though the prices have held relatively high, we're still investing into a failure. And so when you're investing money in a company that is putting R&D into failures, it will trickle down eventually. Like it can't stay the way it is because the values won't be there, right? I mean, it's like if I invest in a business, if my friend comes to me with a business idea and it doesn't work, it eventually will be worth nothing, and my money is worth nothing. Now, you could make it seem like the company's doing okay or whatever, or there's more money, or there's venture capital, and so you can make it seem like it's going along. And there's these businesses sometimes, and I always think to myself, like, how do they make money? How are they right? And then all of a sudden, in a second, they go out of business. And that's I think the thing that I'm hearing the most as we survey our Noble Gold clients is that they just don't want to be caught holding the bag. Because as you know, a lot of the wealthy people that have invested there have already gotten their money out. I mean, that's the thing. If they felt confident about it staying there, then why so many of these CEOs, why are they selling out on a lot of these stocks? Why are they, you can see Jeff Bezos and all of these people, they're selling out. Why are they selling out if they're so confident in the tech that's happening out there? And I think that's that's the biggest thing that I've been seeing lately is it just this common sentiment.
Kind of an underlying issue that you're seeing as a pattern, so to speak.
Yeah, and so that's the nice thing about kind of what we've been talking about is like you can take these flyers on these investments like Nvidia or any of these ones and you ride them to the moon.
Right.
What do? The smart money, Paul Tudor Jones, Ray Dalio, all these guys, they take the big wins and they move it into the thing behind me, into gold, right? They take those big wins, they take their chips off the table, and then they buy gold. So they got their insurance in place, so they're protected. And that's how they know that going forward, they're going to have something that's solid in their portfolio. And they've taken all the risk off the table, right? The risk is gone for them. And then they can take other chances. And that's how these people become billionaires and, worth all this money is because they take the risk.
Right.
And they take a portion of that and then they invest it and take up some other big risks and they lose some and then they make,
Yeah.
So that's what I'm seeing happen with clients that are talking to us is that they feel like they took the big risk, they profited, and now they want to take some of that profit off the table and get it into gold.
Yeah, I think that's a good analogy, and I think that you'll see more of that, especially if, for instance, Iraq is probably not going to be the only currency that we talked about. First off, they've been buying gold. That was one of the things I wanted to chat with you about. Is that they haven't reported in 10 months, real close. So, which is atypical for them. So I think that that's important. But the central banks have been buying gold, and so they're. It's important to know that when the central banks buy gold and they're collectively doing it at a phenomenal ratio in the last year, call it two. You probably know better than I do, but my thinking is if they're still doing it, so therefore it's going to have some support. So if those folks that have the profits will sell, but then again, the people that happen to make money on a high flyer, for instance,
right.
If they see that stabilization, which I think you'd probably see like I do, is that gold has went up. It's about $300 more or less, whatever, below the high recently, but it still seems like it's kind of basing out a floor. And so is that an opportunity? Because fundamentally, I don't think anything's changed. Supply side, that's supply side.
Yeah, it hasn't changed. And, what I'm seeing, the other thing I'm seeing, just a trend too, I'm seeing so many of these ads of these fractional gold things that you can buy.
Okay.
And I got to tell you, this is like a surefire way to get in trouble. People really, they need to be careful. Buying fractional of things is really a way to just line the pocketbooks of that company. There's ways you can buy fractional gold now where you just buy you can put in $10 or $30 or $100. And what people don't realize is that what they're doing is they're charging you fees on every purchase in and every purchase out. And those fees end up being more than what you pay if you bought a full ounce or if you bought a one-time purchase.
Right.
They're monthly. Some of these people are doing monthly. So they're just making monthly fees. And I've seen fees. I saw a statistic where a client was paying $100 a month to buy gold. Over that year, they paid about 30% in fees to buy.
Man. That's not good.
Also, on the way out, they're going to end up paying something similar, right? So they're going to end up paying 40 or 50% to buy 1 ounce of gold. So instead of paying $4,000 for an ounce of gold, you're going to end up paying $7,000 or $8,000 by buying it monthly. Yeah. So these are all the things I remember when I saw fractional stocks like JP Morgan or Schwab came out. And they're like, oh, we're going to make, everything accessible to everybody. And I was like, of course they are, because they would love for you to buy Apple stock every month and pay a fee and then pay a fee to get out. They're not trying to make anything accessible. They realized that there was people that were willing to do this and there was an appetite for it.
And yeah.
So it's, there's that trend. The other trend, I don't know if you saw, the biggest payday loan company in the world, in the U.S., said that they're seeing a big trend of people that are doing early payday loans, getting their pay to pay for groceries. We've never seen that before.
I haven't seen that either.
Yeah, and so what that leads me to believe, and what's that saying is that the economy, if people are getting their paycheck too early to cover groceries, that means wages have not moved up enough. That means that people are not doing as well. The economy is not as well. The unemployment's much higher, and I always believe the unemployment is much higher than what they're reporting.
Yeah.
These are statistics that people should realize. And the next time you see credit card debt skyrocket, you see all these things, it comes down to assets. It comes down to there needs to be a shift, a mindset shift away from paper, away from fiat, away from these fractional ownership, and you got to own things by yourself. That's the key to ultimate wealth. And there's people here that I know that are listening and saying, you know what, I'm in a bad position. I can't do it right now. And there's people that are in a good position that just say, well, I own a fraction of this and I own a fraction of that. And I'm telling you right now that I would be concerned to own a fraction of anything. The banks are not your friend. The only way to really control your own destiny is you have to have some of these assets owned by yourself. And that's the thing at Noble Gold that we've always prided ourselves on, is that we help you buy it, but you own it. It's yours. Whether it's an IRA, it's stored there, it's yours. Whether we ship it to you, it's yours. Nothing's fractional. It's all your assets. And, I think about this when I talk to older people that, that I want to set aside some money for my grandkids or this and that. It's like, you don't want to set aside money for your grandkids. You want to set aside gold. Because if you want to give them wealth, like my kids have a net worth, and my twins are going to be 7 in a week and a half, and my oldest is 9.
Right.
They have a net worth because they own gold and silver.
Sure.
Yes, maybe they have some stock stuff too, and maybe they have some, but whatever, it doesn't matter. The only real net worth that I count is the tangible assets, and I'm giving them a head start on owning those things in the future. And I hope that they never have to sell any of the gold and silver, but they may need to. They may need it to buy a business or to buy a house or to whatever that's going to happen. But at the end of the day, they're getting assets. And I feel very comfortable that the gold that I'm giving them today, the silver, I've been buying them silver since it was, $20.
Right.
And I'm just stacking it for them. And one day they're going to go in and they're all going to have a safe, and they're going to go, Dad bought this silver at $20. Now it's at $500. Right. And it's $5 an ounce. And look at what's there. And that's how you build wealth in this country today. It's the only way to build wealth, in my opinion, because everything else is going to get taken away. Like the dinar is, I hope, going in the way that you are recommending, and it's going up and it's gaining value, but our currency is not. Our currency is going this way. And anyone that could, listen, I'm happy to debate anyone that wants to argue this against me, but there's no evidence that it's going to correct itself or go back up. We are on a terrible trajectory. And every currency over the last 200 years has been wiped away except for the pound and the dollar. Like we're actually, it's a miracle the dollar's even here.
It's absolutely unique.
It's absolutely unique.
Yeah.
So, and the fundamentals are not good, right? They're not good. We're not growing our economy enough to cover our debts. We're not adding more gold or silver. We're actually going into more debt. So these are things like, if you don't realize these things are happening, like get off of this, call us, we'll send you some guides, but everyone needs to go and do their own research, because it's literally happening right before our eyes. And I know, people say like Ray Dalio, like he's an alarmist and this, but I think people should read his book. They should listen to him and just get a little bit of taste of what this guy, because he's a very smart guy. He's seen it before. He's a billionaire. And listen, it's not going to matter to him. He's 60 years old. Like, what does he care? But he's trying to tell people that this is going to happen in the future. He's trying to sound the alarm.
Sure.
That we're going down a perilous path. And I know, like right now, it's a strange time. We're in this government shutdown, and
exactly.
And it's terrible. There's people that are living on the money and they can't afford it. And the government's, in a position where they're in this stalemate. But also I look at it and go, but sometimes we do need a stalemate. Sometimes we have to say we're spending too much money.
Yeah. Wake up.
And I know it's bad, and I know it's unfortunate. I know there's SNAP benefits that aren't going out. There's all these things. But also sometimes we have to realize that we do have to take a stand and say, we can't spend this money. How do we find cuts? I saw this stat about University of USC.
Okay.
USC just they laid off 900 people
Whoa.
because things are happening there, right? They're not funding it.
That's
Guess what? USC is still open. They're still running. So basically they had, I mean, like you could probably argue 100 or 200 needed their jobs or whatever's going to happen. But the fact that this, way that Americans are getting their money sucked out of them, these college kids, and they had 900, they laid them off. The college is still running. They're still going. So they had probably 600 or 700 employees that they shouldn't have had, I don't know.
Sounds bloated, yeah.
Yeah, but what I'm saying is that like when you see that happen, my first thought is like I feel bad for those people, and
Sure.
I hope they find another job out there in another sector. But like the fact that school is only around because of the government's aid, that all these kids are going into tremendous debt, and all these kids don't even realize that the school is bloated, and basically they're paying for it with their futures.
Right.
This is the time that we're in. Like we have to wake up. And so, listen, I think at the end of the day, like I'm so happy to learn about the Dinar. I love to learn more. Gonna continue to watch your show and get more educated. And I haven't bought any, and I think I'm going to. But I also, you got to look at the other side of it too. Is like you got to have the stable things too to back up the high flyers.
Yeah.
And I think gold and silver and actually platinum. I was just talking to a guy today about platinum. He's been buying platinum for years. Platinum's up 60% this year. So I think you got to be diversified with those three metals right now. And that's your stable portion. And then you take some flyers on some other stuff. And
there you go.
And I think in 5, 10, 15 years, you'll be happy that you did.
Absolutely. So, hey, awesome conversation. Would you like to, say something for my followers on how they can reach out to you?
Yeah, my book, they can go to Amazon and get my book, Silver's the New Oil.
Yep.
The whole book's about silver, and then I have a platinum chapter at the end, and then I have a chapter on real estate. I own, I'm a part owner in 30 commercial properties. So I have a decent amount of experience. I also sold commercial real estate. I have a whole chapter about what I think the opportunities are today. So even if you're just like, I want to learn about silver, but that's not enough, I have a platinum chapter and I have a real estate chapter in there at the end. And actually, I'm doing the strategy. I own 2 properties in Greenville, South Carolina that falls into my strategy that you'll read about in here. So I think silver is a huge winner. I think platinum's got a lot of opportunity. And then I also give you a real estate strategy because they all have different reasons to be in your portfolio.
Right on.
I think real estate is really just a tax depreciation play. And it's really a way to hide money in real estate. And so I think that's a big way to do it. There's a lot of tax advantages in real estate. Mm-hmm. Silver, I think, is the big winner in terms of just growth potential. And also the nice thing about silver, there's no work, right? There's no work in silver, right? You put it in your safe and then it goes up and you sell it, right?
Yeah,
you don't have to mine it. You don't have to do any of that. So each thing kind of plays a different role. So check out my book, or you can go to our website at noblegoldinvestments.com. I've trained everyone there. It's all live people. They all own gold and silver, everyone there. They all own other investments too. They're smart people, friendly. They're going to give you good information. We're a family-owned business, so if you want to talk to real people, no bots, give us a call. So check out Noble Gold Investments, and then we have some good promotions going on some free gold and silver that we're giving away on qualified purchases also.
Oh, good. Well, good. It's been a pleasure once again talking to you, Colin. It's awesome. And thank you for bringing me into the equation on your time with the Dinar, because that's cool. I'm passionate about it. Yeah, it's very nice. And one of the things I choose is, yes, of course, real assets. And that's why I think what you do and what I do are complementary. And I'm glad to do it. It's awesome. All right. Enjoy your day. Have a great day.
Thanks, Brett. Talk to you soon.
Bye-bye. Have a good day. So, actually, to this article that I mentioned that I was going to bring in, it's called Iraq's Gold Reserves Are Approaching the 171-ton mark. And why is that important? Well, one of the things that's important is because since January of 2025, it looks like they've net added 8.2 tons of gold over a 4-month period through July to November. Okay, so from January, they got to somewhere around 162, 167 tons, and they went up to 170.9. Okay, so that's big. And why is that important? One of the things I've been talking about is that that the countries sometimes don't report, and here you see that there's always sort of a delay. Sometimes it's 3 to 6 months for Iraq, which is normal. IMF even talks about that. But the good part about it is that they have an increase. And this article says the World Gold Council confirmed on Thursday that Iraq's reserves of the yellow metal have approached the 171-ton mark, maintaining its global ranking among the countries with the largest gold reserves. It says Iraq did not buy any quantity of gold during the 7 months of 2025. That was my tell, any gold during the first 7 months. And so when they come out with 170 tons, so they subsequently have increased their gold holdings. Yet it maintains its 29th place globally out of 100 countries, the largest reserves of the precious metal. He points out that Iraq's gold reserves amounted to 170.9 tons, which is equivalent to about 21.6% of its other hard currencies, and thus it came in fourth in the Arab world after Saudi Arabia, Lebanon, and Algeria, with the largest gold reserves. So, and they like to always reiterate, the United States of America tops the list of the world's largest gold holders with 8,133 tons. I think it's even actually a little more than that by a short margin. But followed by Germany with 3,500 tons. Keep that in mind. The next closest to the United States is Germany with less than half of the gold the United States has. Okay, then Italy, it talks about Trinidad, Tobago, and so forth and so forth. And it just goes down in pecking order. So it's worth noting that the World Gold Council, which is based in the United Kingdom, has extensive experience and in-depth knowledge of the factors affecting the market changes, and its members include the world's largest and most advanced gold mining companies. And then notice it mentions gold mining companies. I think I'm going to be talking about that in the future, so keep that in mind. This looks like since July increased some significant tons of gold, approximately 8.2 tons, I think that's what I said, and that's big. So they don't just do it all in one day. They do it collectively over time, and that's what the attrition has, a collective has been since January. And I think the numbers start off with, again, I'll reiterate it. It looks like in January 2025, they had 152.7. In May, they have 162.6 of 2025. July, 162.7. And in November, they show 170.9. And realize that the World Gold Council is reporting late. The IMF already knows what they have. That's how I would see it. So it says here the central bank's precautionary foreign reserves is an article that goes back a little bit. It says the monetary policy indicators for the first half of 2025 show that foreign exchange reserves reached around 100 billion, which covers the issued local currency. So it's talking about covering local currency. That's what it's going to be used for. I think it's going to be used for supporting the value of their currency, which foreign reserves do, and so does gold, which it amounts to about 98.4 trillion, recorded a decrease of 3.8%, not 38, 3.8% compared to the same period of 2024. So the reduction of the currency is diminishing. And it also gives you some inflation rates. They've decreased the inflation rate to 0.8%, a decrease of 76% compared to 2024, and had a significant impact on maintaining the general price level. So maintaining inflation is really important. Furthermore, foreign reserves at their current level are sufficient to cover 18 months of imports. I think they really only need 3. Iraq's got 18. We'll call it 6 to even be fair. It's still 3 times more. Okay, there's a gold reserve of 167 tons, what they talk about. Like I said, it's dated. This is just information, okay? So ultimately, what are they talking about? They say that we emphasize here that growth rates achieved in foreign reserves were consistent with the central bank's plan to enhance returns and build capabilities in the field of self-management and reserves, which enabled the establishment of the international bank relationships. International bank relationships. So in other words, those correspondent banks that we've been talking about, right? Europe, everywhere, Japan, that's big because that's what they're talking about. Other reputable financial institutions, what do you have? You have a lot of them. The United States Treasury, the World Bank, Bank of International Settlements, etc. International financing and consulting organizations. Who are they? Well, Ernst & Young, Oliver Wyman, K2. Okay. The Arab Monetary Fund and the international institutions concerned with the investment management and contributed to helping other banks or our banks build international banking relationships, here again, with correspondent banks in accordance with the central bank's plan to regulate foreign trade, financing, and implement the comprehensive banking reform program. So here's a snippet is basically the data that I told you, 8.2 tons over 4 months from July to November. My next thing is that we're going to see that they suggest that they have about $112 billion in reserves. And if you go back to a specific time frame, I think you're going to find that's going to be not just the other day. So a lot of the articles that are out of the news, they're not necessarily based off real data. The real data shows that they have about 112, and that's months and months ago. But now they've increased their non-oil revenue streams. They've significantly declined in their gas flaring, and then their exports, their outputs are going up because Iraq is using all their inputs inside the country, and they're developing them and now exporting them for outputs. They take both sides of the trade in this particular case. Hence why many governments in the world, and institutions and everything, realize that Iraq has an immense value, and that's going towards stabilizing their exchange rate, and it's also going to keep inflation low because of the fact that they have these new technologies and new tools to be able to keep inflation low. 0.8% is unbelievable. Look it up. It's awesome. So if you like my content and you enjoyed the video and my interview with the president CEO of noblegoldinvestments.com, hit the like button, subscribe, check out their phone number, it's in the details. Enjoy, good conversation, homegrown people, and they're simple and helpful. So enjoy. Thank you very much. Once again, guys, don't forget to hit that like button if you like this content. Subscribe to the channel or join us at the Militia Man and Crew Patreon community for even more exclusive content. You can also donate to this channel by hitting the links in the banner to help keep this page up and running. Your generous support is greatly appreciated as always. Much appreciated. Thank you so much.